Good evening, everyone, and welcome to Soul Sisters 10X. Today is December the 13th, 2024. Good to be back with you all again on this evening. Hope all is well. A little chilly here in Utica, New York. A little cold on today, but we thank God for it and be able to see another day. All right, we're going to get right into it. First, before I get into tonight's subject, I just want to share a little bit about what I experienced this week. One of the sisters that listened in and I have been communicating back and forth a little bit. She's working on getting her credit score in check. She's doing a great job. And a while ago, she had messaged me and got some information. And I was at work, and real quickly I Googled the Better Business Bureau phone number for her. And when I Googled, I gave it, passed it on to her. It was a while. She again got busy and whatnot, but anyway, she did tell me that it was okay for me to share this information on tonight. So, anywho, she called that number, and someone did answer, and a lady said, "Praise the Lord, Sister Fields." The lady on the other end of the phone had shared with her, was able to look at her information on her credit score and whatnot, and she had something from the past on there, and she had told her if she paid her an X amount of dollars that they would be able to take that bill off of her credit score. So she, in the meantime, she had texted me and asked me if I had heard of anything like that before. And again, I was at work. So I read it, kind of tried to get back to her as fast as I could. But I had never heard anything like that. I thought it was pretty weird. So when I got an opportunity, I gave her a call and whatnot, and I encouraged her to do her research, because the lady also said if she had paid X amount of dollars a month or something like that, it was like a protection or something um, for her credit on her credit score. Long story short, later on that evening, she contacted her daughter, and they went and did the research, and come to find out that it wasn't the Better Business Bureau number, and it was a scam. So she was immediately able to block the anything off of her card, get a new card, and thank God all is well. So I learned a valuable lesson as well as she did. I always say on this platform, do your research, do your research. In my quickness, working and trying to help at the same time, didn't do my research, and I just Googled it and gave her the number. Um, but her daughter was awesome, and we kind of chuckled a little bit because her daughter would explain to me, Google the Google, to make sure that the number and whatnot is correct. So I'm sharing that with you on tonight. If you go on Google and any of these numbers that I have given out, and I get them from Google, or to put the number right into your search bar and see what pops up to make sure that is the legit site. We did find out between the three of us, mainly her daughter, because she's technology savvy, did find out that that was a hard search. Whoever hacked that or was able to get into and make it seem like it was a Better Business Bureau did their homework, and it's not something that you could have seen or caught right away. So I know I've talked before about scams and doing your research and making sure. I just want to reiterate again on tonight to make sure that you do your research, make sure that things are legit, because it's so um, easy for people to hack even legit companies, Better Business Bureau, the government companies, things like that, and they can make it sound so real, and it's not. It's not real. The Better Business Bureau is never going to ask you for a payment or ask you for money or anything like that. They're there to help. Businesses are legit. So they would never ever ask you in that aspect, do this and I'll wipe this off of your credit report. So if anything ever happens like that, immediately hang up. And you could also report them if you find out the real number, the real information, the real website. You can also report the fake ones, because that's what the investigations and the government and things are trying to do, to get rid of all of these hackers, to make sure to keep us safe as well as them safe too. Okay, so I just wanted to share that with you tonight. And then she sent me a link, and unfortunately, I haven't had a chance to read it or watch the videos yet, but it got my mind to talking about things. Her and I got into a conversation about paying off your mortgage early. So that's what I want to talk to a little bit tonight about. I have not watched any YouTube things or things. She sent me some links or whatnot, but again, I just did some research on the benefits and the cons of things like that. And it's been something that's been on my mind anyway, because again, I still got a long way to go. I got some years to go before I retire, but that's one of the things that my goals is, to try to pay this mortgage off before I retire. So I'm gonna, from the research, I'm just gonna share with you tonight some of the things that I found to be able to help, if that's something that you're looking to do, to be able to help you pay off your mortgage early. One of the biggest bills that any of us will ever have is if you are a homeowner, is your mortgage. Okay. And just keep in mind that if you pay your mortgage off, you're still going to have your homeowner's insurance that you have to pay, and any taxes on the home. Okay. That would always be, as well as emergency fund, anything that breaks down in your home. Obviously, we know all that. So this is why, being money minded, you want to have these emergency funds to do so. So I thought the information that I found was a little bit interesting. How to pay it down, and why we should pay it down, and if we should even pay it down. Because some say that there might be some cons to that, to paying off your mortgage early, and I learned some things about that as well. So I'm going to share those, I think, first. So obviously the cons in paying your home off debt free, paying off your debt early. You will have peace of mind. It will save you thousands of dollars in interest payments over the years. And it will increase your home equity loan faster. The less that you owe on your home, your home will actually be worth more, because you don't owe anybody. A bank is like a third party, a second party to owning your home, because it's yours, as long as you're making the payments. If you're not making the payments, of course, then the banks can come in and say, hey, and they can foreclose and whatnot. So there's a risk factor on there too. So if you pay that off, it eliminates the bank from being involved in anything, and now you own all that equity on that home. What I found was pretty interesting is some of the cons is, and I didn't realize this, that some mortgages have fees, penalties for you paying off your mortgage early. Didn't know that. So it's very important to look into if you're looking or thinking about paying your mortgage off, look into that before you do. Now, if it does have fees, a penalty on your mortgage, say you got a $5,000 penalty on your mortgage, is that necessarily a bad thing? No, if it's going to save you money in the long run, and you're going to be debt free. So it has to make sense to be able to pay that extra $5,000. They're going to get their money any way they can, or whatnot, any way possible, anyhow. But it was interesting to me to know that paying off your mortgage can come early, can have a penalty to it. Another con, and I have heard of this, and I've heard of people saying this, and they don't advise to do this, is using your retirement to pay off of your mortgage, because your retirement is for your retirement. So yeah, that's great that you're debt free. You may not have any more. I'll use myself an example. 9 more years, Lord's willing, I'm out. I'll be able to retire, but would it make sense for me to withdraw and take my 401k to pay my home off, and then when I retire, I don't have the money because now you're not making any more money and I don't have that money saved. Be a con if you're thinking about using that as a resource to pay your mortgage off early. So keep that in mind as well. If you pay your mortgage off early, when you do your income taxes, right now we have, we're going into tax time, and anything renovations that you do to your house, any interest or whatnot, you can claim as a deductible on your taxes. So we keep that in mind as well. If you pay it off early and you go to do your income taxes, you won't have that as a deductible anymore because your mortgage will be paid off. Okay, so that can be a con as well. So just keep those in mind if you're thinking about that. All right. So some ways that you can pay off your mortgage early. I have thought about this, and I actually think I'm going to try it next year. My car will actually be paid off next year. So one thing that I'm thinking about, one thing that they suggested you do is you pay your mortgage biweekly. What does that mean? What does that do? So if your mortgage is $2,000 a month, and instead of paying the $2,000 on the first, pay $1,000 on the first and $1,000 on the 15th. And that also helps increase your credit score. It looks like you're making more payments on your mortgage, okay, and it's showing your payment, your repayment history. It looks like you're not such a high of a risk because you're giving them money every 2 weeks instead of once a month. So that's one way of paying it down. And by doing that, it takes, I believe, what I read was it could take anywhere from 3 to 5 years off of your mortgage. So if you have a 30-year mortgage and you pay bi-weekly, it could take 3 to 5 years off of your mortgage. So that's one way of paying off your mortgage early. Another way is once a year, some banks, which I didn't realize this, once a year you can pay like a chunk, a big lump sum. Say you got a nice bonus, you could pay like a nice $10,000 rate on your principal, and that of course will bring down your how much you owe on your home and whatnot. But what they don't like you to do is to give those big chunks more than once a year. So I thought that was pretty interesting. A lot of banks or stuff frowned on that. And it could be because some mortgages has that penalty. If you pay your mortgage off, it has that penalty fee attached to it. All right. Remember, this is a bank's loans and whatnot. These are all businesses. They're in it to make money. They're making money off of you and I. Okay. So yes, they'll give you the loan and whatnot. You're a great paymaster, but they want you to keep that loan. This is why they encourage, they try to get you all the time. Again, I just used my car 4 more months. I can't wait. We'll be paid for, right? So what's happening now? I'm getting all these things in the mail from my cards in the car dealership. Hey, there's 2025 and whatnot. It's a business. They don't want to lose your business. They want you to come back and buy something else. It's the same way with the bank. The bank wants you to keep that mortgage. They want you to keep that loan because you're paying them that interest. That's how they're staying afloat, is by having that interest, by you paying them, having that loan. So that's where some of the fees and the penalties come from. Okay, so they don't like to see that kind of action happen. But that is something that you can do. You can give that one extra. It's called one extra mortgage payment per year, like a big chunk, like a 10 or 20,000. Now, if you pay the smaller amounts on your principal, they're not going to frown from that. They're going to be, oh, okay, Sharon's paying an extra $200 this month. Hey, that's cool. That's not a $10,000 payment. But if I went through and said, hey, I got 10 grand and I want to put 10 grand on my principal, they're going to tell me, okay, well, you're only going to be able to do this once in 2025, unless you're going to pay the whole thing off. Okay. It's a game. I know it sounds horrible, but do your research. that could be at different banks, and not all of them are like that. Okay. Another way of paying off your mortgage early is refinancing. The articles I was reading, if I can find it here, I did it during COVID 2019. 2020, we saw some of the lowest interest rates that were out there. And I'm talking 2 and 3 and 4. Okay. And I took advantage of that. So I refinanced. And when I bought this, my second home, I'm in now, I took out another 30-year mortgage. Didn't want to do that. But being single, whatnot, I took out another 30-year mortgage. I was able to, in 2020, I bought it in 2019. In 2020, I was able to refinance for a lower interest rate. And at that time, because nobody was taking loans, nobody was buying homes, nobody was moving, I actually had no closing costs, no fees, no nothing. I was blessed. I didn't have to pay anything. I was able to refinance for free for $6 more a month, and took 10 years off of my mortgage. So in my first year being in the home, I went from a 30-year to a 20-year mortgage. Okay. Obviously, it's not that way now. I know mortgage rates are high. Interest rates are high. With the change of presidencies, we're not sure what it's going to look like. Every president is allowed to do what they want in finance and business laws and in accounting. The laws change every 4 years. Every time there's a new president, they can put a different amendment, and this law's amended, and that law's amended in the accounting aspect. So I'm not sure if anybody's heard, but Trump wants to do, I forgot what the tax is called. It's not coming to my mind right now. Tariff. I think it's tariff. It's called the tariff tax. And everybody, oh yeah, well, put this extra tax on when we get everything from China. We get everything from India. Well, people don't realize that it's going to hit you. It's going to hit us. It's going to hit the consumer. And I actually was watching the news the other morning, and he kind of said, well, I don't know if it's going to hit the American people. I don't know. He's a smart businessman. I'm not bashing Trump. I got to get off of this. He's a smart businessman. He knows that it's going to filter down to the consumer. Okay, because if we have to pay for more for it to get over here, if there's higher taxes for whatever we're getting from out of the country, it's going to hit us. So some think that prices are going to go down, where prices are not going to go down. Unfortunately, we're going to see them rise again when he adds this on, and he has vowed to do it the day that he steps into office. I know some financial consumers, some economics, are saying that it may not hit us right away. It may not be on foods. It might be on goods, but it's going to impact us sooner or later. So that is another reason why the shopping and the spending for this holiday season has increased the way it has, because people are fearful of these things. I got off on a tangent. I'm sorry. Home back to mortgages, but it all plays out in the same thing. So you have to be careful with that. But anyway, so what was I talking about? Oh my goodness. Making the extra payment. Oh, refinancing. So look into refinancing to get a lower interest rate or to take years off of your mortgage. Okay. Be very careful with it. You have to also consider now when you do, there is going to be a closing cost in effect, unless another major crisis happens. If there wasn't, but there's going to be closing costs, and there might be fees if you go to refinance that. Not only that, make sure that you don't go house poor. What do I mean? Don't refinance to get those years off of your mortgage, but your mortgage payment goes up $500 a month. If you can't afford that, then it's not in your best interest to do that. So that would be another way that you might just, instead of refinancing, if you have that extra $500, is taking that $500 and putting it right on the principal of your mortgage. Okay, so that's another way to do it, to pay your money, your mortgage down. Refinance. Another one is to round up your mortgage payment. Say your mortgage payment is $1,680, $80. You can round up and pay them $1,700 or $1,800 or $1,900 a month. Round up. Okay. And then, but when you do, make sure you're not just giving it to them. Make sure you put on there the extra that you're rounding up is going towards the principal of your mortgage, because that's going to pay it down. You don't just want to give extra because they're just going to take it and apply it to the interest. When you first buy a home, those first 5, 6, 7, 8 years, most of your payment is going to the interest anyway. You're not really paying on the meat and potatoes of your mortgage. Okay, so that's why it's important to do your research and make sure you understand what you're doing when you're doing things like this. All right, so I talked about biweekly payments, paying extra on your principal, rounding up, refinancing to a lower interest rate. Then I thought this was interesting. It's called recasting your mortgage. And I'm going to get into it and learn a little bit more about it, but I just started reading about this tonight. It says it may be a help. With this strategy, you can make a lump sum payment towards your principal balance, and then the lender would amortize your loan, spreading the remainder balance and interest across the rest of your loan. So I got to get more deeper into that, but I thought that was pretty neat. It says typically this is meant to lower your monthly payments. It means it makes things more affordable for you. But as with some strategies, you can use it to pay off your loan earlier as well. Okay, so it's called recast your mortgage. You just need to continue making your old payment, higher payment, even after you recast it. So what it's saying is, if you pay extra on it and you recast it, all of a sudden now you got an extra $5,000 overage on your mortgage, okay, and it will bring your payment down. You don't want to stop paying that old rate that you had. You want to continue to pay that, and that will help you pay your mortgage down as well. Again, I just learned about this tonight, so I'm going to read a little bit more on it so I can understand it a little better. But it's called recast your mortgage, okay? So that way it will help you to bring it down. So those are the seven things that I have studied a little bit on how to pay off your mortgage early. But again, I thought it was real interesting, the pros and the cons in doing it. Obviously, one of the pros is being debt free, and that's the biggest one. You'll be able to save more. You'll have a brighter future when you pay things off earlier. That's my goal, retiring and not having that bigger bill. But keep in mind, you don't want to use your retirement to do that, because if you're going to retire, then you won't be able to live and have that money that you have. Okay. Penalties. This one is huge. Make sure that your mortgage does not have a payoff early penalty. If it does, look at what it is and figure the math out to see if it makes sense for you to pay that extra fee. As I was reading, I heard, I was looking at some of them could be upwards of starting at $5,000 if you pay off your mortgage early. They're penalizing you for paying it off early because they're not gaining that interest on you, and you have to pay them that fee. Is that fee feasible for you? If it is, and if it works, that's great. Go for it. If it's not, that could be a con. You might want to go one of the other ways and refinance or pay extra on the principal. I also like the biweekly aspect of it, paying on your mortgage every other week. And that has been known, I guess, been a known fact for years. And it could take anywhere from 5 to 7 years off of your mortgage by paying it every other week. I also like that lump sum. If you're one that you have a job, you get a nice chunk, a good bonus, and you're able to throw an extra $5,000 or $10,000 once a year on your mortgage. It's extra money. Go for it. I thought about we're going into January. Matter of fact, I seen somebody I put on social media. It was a little a meme. I think that's what they call them, a meme. My bank account looks like this, and it's December, and it says 0.00, and then it says by February 15th, my bank account's going to look like this, and it said like $8,000 or $9,000 because obviously income tax time, you know. But again, we do the wrong thing with it. We want to go out and buy the plasma TVs and you know, the new furniture every year and stuff, but we don't think about paying down our debt. That if you are one of those who are fortunate enough to get that kind of refund, that would be a great investment to use to put on the principal for your mortgage. That would be that nice one lump sum chunk that you could put on it that year. And again, that could also go along with helping you to recast your mortgage. Okay, I paid an extra 10 grand on it. Okay, so your poor, you know, the more you pay your mortgage down, your mortgage payment will go down. So you pay that on it, your mortgage might show up and it went down a little bit, but you don't want to stop paying what you're paying on it. That's how you're going to pay it off early. Okay, so you're not doing that just to, you know, just to do it if that is your goal. All right. But I want to thank Sister that link. I haven't watched that yet, but I'm definitely going to, because it's definitely one of my goals is to be debt free. And, you know, and your mortgage is one of the biggest mortgages that you have. But keep in mind, even when you pay that mortgage off, you want to have some kind of emergency fund. You can call it a tax fund because you still have to pay your taxes and you have to pay your homeowner's insurance. Most people do put their taxes and their homeowner insurance rate into their mortgage. So we get one bill a month, and our mortgage company pays that stuff for us. I think that they come out city tax, school tax in April and October and things like that. When you no longer have that mortgage, don't think that you're scot-free because those tax bills are still going to come, and you don't want to pay that mortgage off and all of a sudden have the city, now you've gone from the bank under foreclosure to the city taking your home because you didn't pay your taxes on it. All right. So keep that in mind. Okay. So I hope this helps on tonight. Get some more into it. So those are some ways of paying off your mortgage early. And don't forget to always do your research. As I stated at the beginning, Google your Google and make sure that, because Google's not always right and won't always give you the correct information. So lesson learned. All right. I hope that helps everybody on tonight. God bless. Amen. Stay safe, stay warm, and Lord's will, we'll be back with you again next Friday night. Thank you.